support and resistance, basically how the market moves. Then we're going to get into patterns, and we're going to show you how patterns work, how you can trade them, how you can make money from those things. Huh? Is that cool? Okay. Right, so support and resistance. Right. So imagine this is a ball, right? If I were to throw this ball onto the floor, what do you expect it to do? To bounce and go up, right? Right. If I were to throw it onto the ceiling, you would expect it to do what? Bounce and come down, right? It's the same thing that tends to happen in the markets, right? So the way that price moves in the markets, it moves in waves, right? So price will go up, down, up, down, up, down, up, down. Right? But as it is moving in waves like that, it is constricted between two areas. An area of support and an area of resistance, right? So what is support and resistance? A support area is like a floor for price, on which price when price gets there, it bounces and goes up, right? Then a resistance area is like a ceiling for price, where when price reaches that area, it bounces and goes down. Huh? Does it make sense? Right, so you can have support and resistance. Right, so when your support and resistance are parallel to each other, when your support and resistance are parallel to each other, please note the condition is they have to be parallel to each other. If they are not parallel to each other, then it's probably something else that is formed. Huh? Right? So only when they're parallel to each other, they form what we call channels, right? A channel is formed when your support and resistance are parallel to each other. We have three types of channels. We have horizontal channel, we have horizontal, we have ascending, and we also have a descending. So price is just bouncing up, down, up, down, up, down, up, down, right? Okay. Right. So how do we make money from support and resistance? How do we make money from support and resistance? Huh? So when price reaches support, are you looking to buy or you're looking to sell? Buy, huh? Right, because you know that the support area is supposed to go up, right? When it reaches resistance, are you looking to buy or you're looking to sell? Sell, right? Because you know that price is going to drop.
It's just like the concept of what goes up must come down. Yeah. So eventually, price then tends to reach some form of resistance, which everyone else can see. For example, if we bring it back to home, naturally, because we're neighbors with South Africa, right? You would know what goes through your mind if the rate, the dollar rand rate, gets all the way down to 11, let's say. What's the first thing that comes to mind? It's too low. Yeah. It's too low naturally because you're neighbors, traders, you trade together and to some degree also use the rand here. So you know if it gets to 11, it's too low. So that is a support. That's where that's the way the support would be, right? And if it gets to, let's say, just last week it broke a rate of 17. Everyone thought, no, it's too high, it's too high, it's too high. That's because that is the ceiling. So that's the resistance of that particular dollar rand. So it's the example that we're giving here. When price reaches a level of major resistance, it tends to drop. When price reaches a level of support, it tends to go back up. Exactly.
Okay. Let me just clear the chart here. Okay. So let me give you an illustration of support and resistance in the markets. Right. So look at this. This is how you draw your support. You remember yesterday we did the rules of drain support and resistance?
Yes. Quiz time.
We did.
Quiz time.
Okay, can you tell us the rules? The two rules.
What makes a valid trend line?
It has to touch 2 or more points.
2 or more points, huh?
For a channel, it has to be parallel.
The support and the resistance have to be parallel.
Yes.
What else?
That's what I remember.
It's not supposed to cut through candlesticks, right? So here's an illustration. Look at this. So I'm going to draw my support. It's touching 1, 2, 3, 4 points. 4 points. Can you see that? Bounce there, bounce there, bounce there, bounce there. Okay. So I'm going to replicate this line. Control, hold my left click, bring my mouse to the middle dot, and I drag. Then when you look at that, you have a touch there, touch there, touch there. Then around this area, it was no longer valid. So let me just extend this one so it can go a little bit further for you guys to see that it actually protruded through and it was no longer relevant at that point, right? So as you can see, bounce, 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 which makes this a valid support. Is it cutting through any candlesticks? No. Okay. So price goes down, reaches support, goes up, right? Then it drops to support. On support, what are you looking to do? Buy. Reaches resistance, you? Support. Resistance. Story goes on and on and on,
I have a question. What if it's like halfway? So what tends to happen is a lot of people then tend to miss the trades, right? As you can see, let's just say the second touch, and you miss that entry when price reaches that level of support, and then it bounces up, and you miss that trade. Are you going to chase the price and enter the trade, or what are you most likely to do?
It depends with my account. In my Panda account, I will chase it. Then in my main account, I won't mess with it. So, yes.
Why is it?
Because I respect it. I wanna correct myself, like self-discipline, psychology. Yeah.
What tends to happen is that people have this fear of missing out. I think, fear of missing out. So that's FOMO, fear of missing out. And when they feel they've missed an opportunity, they will chase that particular trade, hoping that it's still going to maintain that same direction. And then what happens is no one does any form of risk management or any due diligence because they feel that's the last setup they'll ever be able to see. There's setups every single day, that's honest. It's just that humans naturally are very impatient people. We're just very impatient. So you always think that, okay, if I miss this trade, when's the next time I'm going to get the next one? So the reason why we're talking about the rules for drawing a valid trend line. So it needs to touch 2 or more points to make it valid, right? It mustn't cut through candlesticks. The reason being, trading is you need to be very accurate. You need to be at least 99.999 accurate in your entry points. For you to get the most amount of profits, you have to enter at the best possible price. So if price is at the support, you want to basically buy something when it's at its lowest price. Yes, but that's how you end up making the most profit because you bought it at the lowest possible price. So in this particular situation, the lowest possible price is when it reaches the support. That's what you want to do. You do not want to start buying it when it's already halfway going up because I guess that that doesn't make any economical sense at all. right? So if you're not going to get the most out of a particular position, there's no need for you to take it.
Okay. Is that clear? Any questions there?
Not yet.
Okay. So, let me introduce you to a concept that we call consolidation, right? So this is what consolidation is. It tends to appear in the markets very regularly from time to time, right? So understand something, for the markets to move, right, or for price to move from one point to another, it doesn't just move in a straight line, no? Right? It tends to, it's got moments where it just pauses and it seems as if it's doing nothing. It's not really either going up or down, right? In that phase where it's paused, right, and it's breathing, right, we call that phase consolidation, right? The reason why the markets consolidate is because it has to form patterns. Do you follow? So the market will consolidate, it will pause so that it forms what? Patterns. Okay, let me bring consolidation back home. Let's say this is you, my brother. You're traveling from Bulawayo, going to Harare, right? Okay, so the bus leaves Bulawayo, right? And then, let's say you're now in Gweru, right? Usually stops in Gweru, right? So you now stop in Gweru. But what's happening in Gweru? You guys are getting to your takeaways, you're getting your water, you're getting refreshments, right? Before the bus either continues all the way to Harare, or it could just choose say, we don't think we have enough fuel, or maybe we have a tire puncture or something, then it has to come back to Bulawayo, right? Yeah. Same thing that the markets tend to do. So the markets will move, right? And then they'll consolidate. It will seem as if you guys have paused, but actually you're gaining momentum, huh? Right? It's in Gweru, it's in that state of Gweru, right? From there, then the markets will then continue to move. Does it make sense? Okay.
So just to be a bit more practical, to get a bit more technical rather, into what is happening here. That channel is a downtrend, yes? But at some point in time, price declines, drops, which is a level of support, and then goes up, but still maintains that original direction, which is a downtrend, right? So when price, during that first pull, right, when price initially drops all the way to the support, there are sellers which became satisfied with the profits that they attained by the time price reached the support. Yes? So if you're satisfied with your profits, you tend to what? Exit the trade and take out your profits, right? And as price begins, if you're selling, for you to take out your profits, basically that's basically closing a position. You're basically doing the opposite of what you're initially doing. So if you're selling, for you to get out of the position, you have to, it's a buy order. If we're going to get a bit technical about this, which is why price then tends to reverse. It seems like it's reversing to go back up, So sellers, original sellers, keep exiting the markets. So that in the end causes a loss of momentum. Simple laws of physics. Without momentum, price is not going to continue going in the downtrend direction. So this consolidation phase, which is also accumulation, is where fresh sellers enter the market to replace the original sellers which exited previously, taking their profits, right? Which is what then causes price to then have this very aggressive drop next after that consolidation and accumulation phase. So that's basically the psychology of what's happening there. This pattern that Mnash has just drawn is called bearish flag.
Right, so if we were to look at that, right, can you see that initial drop, huh? Right, then you get a channel in between. So I'll draw the support for the channel. Right, can you see touching 1, 2, 3? That makes it support. Support is valid, huh? Then I'll just make it touch that. You've got those are the upper points, huh? Then Replicate that line from there to there. Can you see it travels exact distance? Right, we continue. Right, I'll draw this resistance over there. Right. Replicate it, get it to there, right? Channel, huh? Then that same distance from there to there, our flagpole makes it all the way to there. So can you see the way in which the price was actually moving when it was going up? That was consolidation. But the general momentum was what? It was down. Huh? That's why you then get an overall descending channel. Can you see that? So it's the way in which the markets tend to move. They won't just move in a straight line. Even if price wants to drop from one point to the other, right? It will move through by consolidating. Does it make sense, guys?
Hence the term pattern. Pattern, something which is a pattern, occurs in the same manner over and over again under the same conditions. As you can see, this is 1, 2, 3. He's drawn 3 flags which look identical and have behaved in the same manner time and time again. Right? So, in a way, just to give you guys a brief look into patterns, why we trade patterns is basically using that description. They will occur in the same manner time and time again under the same conditions. So you could use that to predict what could happen in the future based on what happened in the past. So that's basically what's happening. Every year we spend 3 months back testing. So we could spend an entire year, the whole 3 months of, let's just say this year, just back testing, looking for flags that occurred last year to get a particular win rate. How many flags did we see? How many flags worked? How many flags didn't work? You get a 30% win rate, so that gives you that further conviction. Remember what I was talking about yesterday? You could make money if you could make money from being correct 3 out of 10 times. You only get the conviction if you have back tested that theory. So it's very, very important for you to, in your during your spare time, in your practice, to go back in time and pick out as many flags as you can to give you that practice and that conviction that this is how flags work time and time again. Right?
Okay. Right. So we're going to list down the patterns, right? Jumping into the patterns now. So patterns. We have 2 types of patterns. They're continuation patterns and they're what we call reversal patterns. Right? So for continuation patterns, we have what we call bullish and bearish flags. We have a symmetrical triangle. And we also have pennants. For your reversal patterns, we have head and shoulders. We have head and shoulders. Right, we have an inverse head and shoulders. We have a rising and falling wages. Rising and falling wages. Double tops and double bottoms. Double tops and double bottoms. Then we also have broadening wage. Right? Okay. So the first one, bullish and bearish flags. Remember what bullish means? What does it mean? Price is going up, right? Okay, bearish means price is going down. So the first one is known as a bullish flag. This is how a bullish flag would look like, right? So you have price goes up, right? Price goes up, 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 up. That's your flag pole, huh? Right? Then you have consolidation of price, right? But that consolidation forms a channel, huh? So if it's a channel, it means our support and resistance are what? Parallel to each other, right? Then from that point, price will go up, right? How do you make money from the pattern? This is how you'd make money. The moment it breaks your resistance, right? The moment it breaks your resistance there, that's where you would what? You'd enter the markets, huh? And you're clicking buy, huh? Then you take profit. Remember, it's the distance of your flagpole. Your take profit is your distance for your flagpole. So if this distance from there to there, if that is 500 pips, huh? So you'd expect price to move from the support all the way till there by exactly 500. Does it make sense? Any questions? All right. But you need to understand something. One very critical part about your flags is the channel. Right? You need to make sure that your support and resistance for your channel are parallel to each other. All right? And again, oh, I probably forgot to mention, but you remember the two rules that we have for drawing support and resistance? Those are the same ones that we're going to be using for all the patterns. So when you're drawing your patterns, you're following those two rules. Is it touching two or more points? Yes. Is it cutting through candlesticks? No. Okay. Then it's a valid what? Support or resistance. Does it make sense? Yes. Okay. So TK has drawn for us a flag on the board. Right, so as you can see, right, the flagpole price goes up, right? Then it drops, goes up down like that, huh? Forming your channel. And then on this point here, this is where you would enter the markets for a long, huh? Right. Then the distance from that point to the, if that is your X pips, from that point all the way till there, that's where you'd what? You'd take profit. Are we together?
Trying to draw these patterns on day one is very difficult. It's like learning how to write. Yeah, it's like learning how to write. So, but for you to become good at writing, you have to do what? You have to practice. Right? So if I was to ask this question, how many hours a day would you put into practicing how to draw this flag? A very honest answer. Practical answer. One that you know you're going to stay true to.
2.
2 hours a day?
Yes.
Without fail? Yeah?
Yes.
How long would you take?
2 is okay. 2.
2 is okay.
2 is okay.
And you?
30 minutes max.
30 minutes, guys. You see, this is honest here. A lot of the time when we're doing this, when I'm asking these questions, right, somebody will be like, I'm going to spend 24 hours a day just practicing. 24 hours a day just practicing. Turns out this guy doesn't even spend 15 minutes. Right? People, you have to stay true to yourself, but I will say this. Recommended time spent just practicing during these patterns, I would say, is 4 hours. 4 hours a day. It's 24 hours a day. Look, you guys are looking to make money from trading. It's only fair you're actually going to put in the time. Right? Right now, it may seem very confusing. The chart, the pattern, how do I draw this? What do I click? What do I do? You can only learn that from practice. You just have to practice. If you don't practice, you're not going to get it. That's just the honest truth. How many of us are willing to put in the work? Half the class. This guy. 30-minute guy. All right. So you just have to put in the work. Just trust me on this. Right?
Okay, so bearish flag. This is how your bearish flag would look like. Right. So price falls. Right. Price would fall, and then price goes up, down, huh? Forming your what? Your channel. You follow? Right. Then the moment that it breaks your support, the support for your bearish flag, that's when you click buy. Sell, right? Yeah. We're going ahead to sell because we're expecting it to drop, huh? Right. And then the distance from there to there, that's the same distance you can expect price to move from the resistance this time all the way to that point over there, huh? All right. It's a beautiful pattern. Yeah, amazing pattern actually.